Hi everybody, and welcome to the April 2024 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. March was a good month for financial markets, with most up in the low single digits, but the first quarter as a whole was a bit more mixed. While the U.S. and developed nation stock markets did very well, setting several new price records on continued economic and earnings growth, fixed income lagged as interest rates rose during the quarter. Both in their different ways reflected the broader economy where growth continues, but so, unfortunately, does inflation. Let's start with growth. Job growth so far this year has remained quite strong, and both income and spending have remained positive, as has business investment. While there are some recent signs of slowing as both consumer and business confidence has pulled back a bit, overall, for the first quarter, the economy continued to go from strength to strength. There simply aren't any signs of imminent recession in the data. That healthy growth, though, also kept inflation up, meaning we're not seeing the continued decline that we had hoped for. Both headline and core inflation are still well above the Federal Reserve's target levels, and the improvement looks to have essentially stopped, which means the Fed can't declare victory over inflation. The good news is that markets have largely adjusted to this, and market expectations on rate hikes are now much closer to what the Fed itself says. And that should help limit future volatility. But of course, rates aren't the only concern out there. Things we need to watch include the effects of the war in the Middle East on supply chains, which may be pushing inflation back up, the pending election, which will increase uncertainty across the board, and of course, all the things we don't even see yet, of which a very good example is the destruction of the Key Bridge in Baltimore, which will also hit supply chains. There are real risks out there, and we need to be aware of them. But despite all that, we're still in a good place. With the U.S. economy growing, especially on the jobs front, the foundation for markets is solid. Corporate earnings came in better than expected last quarter and should keep growing. Markets have adjusted the inflation and rate cut expectations, removing one significant source of uncertainty. And as we've seen so far this year, after a strong year like 2023, the momentum tends to continue. On the whole, then, after a strong first quarter, we're still in a good place as we move further into the year, and I expect that to continue. Thanks for watching, and I'll be back next month to talk with you again. Until then, be sure to check my blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. And have a great month.